and welcome back to Sibos TV. I'm Jack Delosa.
And I'm Juliet Foster. Coming up here on Sibos today, as thousands of delegates arrive, we'll be looking at what's been making news here on day one of Sibos 2018, including how Swift's customer security program has been tackling the issue of cybersecurity.
And we'll also be hearing from one of the top global experts in cyber threats. That's all to come in the next half hour here on Sibos TV.
Documentary trade still relies heavily on paper-based systems where paperwork has to be literally moved from one place to another for processing.
Here to tell us how the digitisation of documentary trade could be a game changer for corporates, banks and customs, we're joined by Mathew, who's the global head of documentary trade at Standard Chartered. Sam, welcome to Sibos TV.
Thank you, Jack.
Now, Sam, why is so much of documentary trade, such as letters of credit and bank guarantees, still paper-based?
Jack, a lot of it is legacy, history. Think of it similarly to the newspaper. 20 years ago, when the internet first came on board, people said, hey, the newspaper is going to be dead. But I still like my newspaper with my morning coffee. So a lot of it has to do with the way banks did trade and finance the trade. Inherently, the importer and the exporter don't trust each other. So the bank plays the role of a trusted intermediary. Now, to act as a trusted intermediary, historically, the evidencing of that performance by the supplier and so on was done basis paper documents. And that works pretty well. So that legacy has continued, and that's the reason why it is so prevalent.
What would you say is the impact of the use of paper-based systems on trade?
So, as you would appreciate, there's about 4 billion worth of documents, or 4 billion documentary pages out there in the trade finance world. So that gives rise to a lot of manual handling, process inefficiencies, obviously cost intensive, but most importantly, it gives rise to potential errors because a lot of data is manually captured from these pages onto digital systems. So highly inefficient, and that systems are legacy.
Right, so given all of that, what is the impact on the banks themselves?
So clearly, as we go into finding more efficiencies, digitization and technologies such as blockchain are knocking on our doors. It has already started happening in other industries. Banks are looking, and clients are looking at ways to digitize this trade. If you think about it, 10 years ago, not many corporates or banks had a chief innovation or a chief digital officer. We would normally talk to a CFO and a CIO. But the Chief Digital and Innovation Officer is a new role that has been there for the last few years now, with the focus that is needed to try and digitize some of these flows. So the banks are looking at how we digitize, both internally, because paper is not going to stop. So we've got to look at how we convert the paper to data at the first point that it touches the bank, but also how we connect to clients in a digital manner so that the paper itself can be eliminated.
And when documentary trade is digitized, what's that going to look like?
Think about this. Think about the experience you have when you walk into a supermarket physically and pick up goods and pay for it with cash versus being on an online marketplace. You click, select what you want into your basket, and you pay for it digitally, right, using your card or whatever e-wallet it is. So I think in the ideal end state, you will have a situation where the importer and the exporter are contracting on the online platform. Whatever the contract calls for is digitally encoded, and the proof of whether shipment has happened, whether the goods have been loaded, all of that will happen digitally, and the importer, exporter, and the banks involved can see all of that digitally. In other words, it will all be in one place, with data flowing between the partners as opposed to physical documents flowing. So it ideally should be seamless and therefore bring in a lot of efficiencies.
Okay, so let's hold that thought and just take it a little bit further, because what would a digital system actually allow businesses, banks and customs to do that they can't do now?
Right. So if you think about it, physical paper today flows from the exporter to his bank, to the importer's bank, to customs, to the importer. Now, if you could digitize that flow end to end, it will bring in a lot of efficiencies in terms of how much time that takes, first of all. Second, the manual errors I talked about earlier would almost be non-existent. So from a risk management and mitigation perspective, the risk of double financing, the risk of fraud, the risk of inadvertently financing a flow that you are not supposed to finance because of sanctions controls, with the paper trail didn't really tell you. All of that risk can be mitigated. So risk mitigation, efficiency, processing costs, and simple turnaround time would be some of the benefits.
Sam, you're based in Singapore. How are some of the countries in Asia digitizing documentary trade at the moment?
Right, Jack, so I talked about corporates and banks having now a chief innovation and a digital officer. So there's clearly a lot of work happening in the industry, both at the client level and the banks level. But there's also a lot of work happening at the regulatory level. So you'll find that regulators such as the Singapore government is getting on to create a national trade platform domestically. Hong Kong is trying to do the same. Bank of Thailand announced something similar. So there's a lot of work happening by the regulatory bodies to see how we can digitize, first of all, in the domestic economy and then connect the dots cross-border.
When you take the much bigger picture, we know that trade patterns, they're changing dramatically. You have rising protectionism in some parts of the world and also greater inter-region trade in Asia. So how is this going to impact on the digitization of documentary trade with that bigger backdrop in mind? Right.
So, look, everybody is looking for efficiencies. At the end of the day, processing costs and where trade margins are today, also with the tariffs rising and potential protectionism coming into a lot of the regions that we operate in, everybody is looking for efficiency. So there'll be, I think, larger south-south flows compared to large inter-regional flows. There'll be more regional flows going forward that will be driven by a lot of the large consumption economies like India and China, for example. So I think open account trade driven by domestic consumption, domestic supply chain is going to become a lot more prevalent. And those flows lend itself to a lot more digitization than some of the letter of credit-based flows.
Certainly an exciting space to keep watching. Sam Mathew, thank you so much for joining us on Sibos TV.
Thank you for having me.
Thank you. Cybersecurity is one of the main themes this year at Sibos. Swift's customer security program, known as CSP, works on strengthening the security of the whole banking system by helping banks improve the security of their individual part of the system.
To update us on the CSP, we're joined by Pat Antonacci, Managing Director of the CSP at Swift, and Marc Hofmann, Swift's Chief Information Security Officer. Gentlemen, welcome to Sibos TV.
Thanks for having us.
Thank you very much for joining us. Now, Marc, we'll start with you. What approaches are cyber criminals using to plan their attacks on the banking community?
Yeah, so first of all, our observations show it's not just one group, so we have different groups. And they have different behaviors in their attacks. However, they have a couple of things in common. So they are far better resourced and far better skilled than they have been in the past. So they're able to do sophisticated attacks. And as we speak, they are learning. And so do we need to learn and improve.
What about the Swift network itself? Is it a target?
Yeah, so we have no evidence at this point in time that Swift has been successfully attacked. We did in the past few years significant investments in our cyber capabilities. And I think the whole community is in an arms race against the bad guys. And so we do need to continue to focus on this topic and do need to invest in that. So as a CISO in Swift, my primary focus is security of Swift, obviously. But the second focus clearly is the security of the whole community. And I think this is a role Swift needs to play to help the community.
Pat, speaking of the community, how do attacks on one Swift customer impact the whole community?
I think as Marc alluded, a single attack is a local infrastructure, so it doesn't have a direct impact on the community. But as the cooperative that we play in the role we play at Swift, we said, let's do this customer security program so we can raise the bar for the entire ecosystem so that you don't run the risk of the lowest player creating the biggest risk and the risk of the player in the chain that breaks the chain, right? A lot of the learnings as well from the community is to take those incidents and learn from them and share that information. And we do that through the Swift ISAC portal that allows us to share the information anonymized with the rest of the community to stop further attacks from happening in a similar spectrum.
And Marc, what is Swift's role in responding to these attacks and indeed the threat of future attacks?
Yeah. So I think Swift can and need to play a facilitator role for security for the whole community because we connect all the participants. I strongly believe that collaboration is a key critical capability of the good guys today and going forward to succeed against the threat on the cyber side. And a good example is, and Pat, you just mentioned that Swift ISAC, for example, we share information with the whole community, which comes from the community and from our researchers and analysts, like, for example, indicators of compromise. So we help the community to learn from the others. And I think this is a critical thing.
Pat, Swift's customer security program, the CSP, is a key part of its response to these threats. What's its specific aim?
So we look at it in three components. The first is to create a baseline of general cyber hygiene that everybody should follow, and we create a framework around that and controls that people should comply with in that process. But on top of being secure, also looking at detection and response. So we've put together a number of tools to, if you are compromised, how do you detect that process and respond to that? The second is understanding that we don't live in an ecosystem that's just our own environment. So we need to make sure that we're engaged with our counterparties and there's transparency so that I understand what my counterparty is doing and he understands what I'm doing so that you can manage the risk around cybersecurity in that process. And then the last one is around sharing. So making sure that we grow from the experiences that we have, as Marc alluded.
Now, we know that December 2018 is the deadline for SWIFT members to comply with the mandatory customer security framework controls. So would you say the community is now on target?
Yeah, I think last year it was the year of attestation. Where are you in your process? This year, as we have the buttons, it's the year to comply, right? Comply now. So we did see a number of organizations already comply last year. We're seeing them continue to fill those gaps that they had on some of those controls, reattest to their process, and by the end of this year, they need to reattest their level of compliance and to be compliant with at minimum the mandatory controls that we defined as that minimum baseline for cyber hygiene.
Pat, what's next for CSP? What do you see for 2019 and beyond?
Yeah, so we need to continue to evolve, right? So it's not a one-time checkbox exercise. It needs to continue to evolve as the threats evolve. So we've already released what we call version 2019. So what are the controls we want people to apply to by 2019? We're looking at that now for 2020 as well. But I think the big key will really be making sure that we continue to evolve our detection and response. There are attacks, there will always be attacks. The quicker we can respond and block that money from leaving the system, that's the success, not necessarily whether we were or weren't secure at the time at a specific customer endpoint.
Okay then, so plenty there to think about, to discuss in the future as well. But Pat Antonacci and Marc Hofmann, thank you so much for joining us.
Thank you.
Thank you for having us.
This year's InnoTribe at Sibos is taking a jump into 2030. By then, today's nascent technologies will have reshaped our industry and the societies we live and work in.
So what are the big four technologies which are going to have the most impact, and how do they interact with each other? Well, here to tell us is Brett King. He's the renowned futurist and host of the world's first and #1 ranked radio show about fintech called Breaking Banks. Brett, welcome to Sibos TV.
Thank you for having me.
Okay, so you are the opening speaker for InnoTribe this
Correct.
year. Give us the big picture and tell us what are the four main themes we're going to be looking at.
So the four major disruptive technology themes, the first is obvious, it's artificial intelligence. Everyone talks about that. Within that, we can talk about robotics as a subset, because any robot that has autonomy must have a form of artificial intelligence. The second tier is what I like to call embedded technologies. So things like voice-activated smart assistants. You'll talk to your phone, you'll order your pizza, book a flight, your smart AI assistant will be able to do that stuff. And then technologies in maybe 5 to 7 years, things like augmented reality smart glasses, where you'll get a data feed in your field of view. Third tier is health tech and gene therapy. So this changes dramatically our expectations for treatment of diseases, longevity, things like that. And then the fourth tier sort of puts it all together, which is the emerging smart economy, smart cities, smart infrastructure, basically. How we'll compete in the future based on technology.
As you say, Brett, it does seem like the four of them fit very nicely together and almost interplay with one another.
They do. I think you have to see this as a sort of a broad economic shift. You know, since the industrial age, economics has been based on this simple supply and demand curve theory that, you know, supply curve goes like this, demand curve like this, you try and reach equilibrium. And, you know, as supply builds, or demand rather builds for a product that you might have, then you have to increase the labor force participation to get there. But when we have technology-based industries or sectors, or AI-based, software-based digital-based industries in the future. The top 5 companies we see on NASDAQ and the S&P 500 now, all technology companies. We talk about BAT in China, Baidu, Alibaba, Tencent, FANG in the US, and so forth. So as we structurally change economies around technologies, you don't have that supply and demand curve anymore. Supply, essentially, once you build an AI, it can infinitely handle the demand. So this is a really sort of deep structural change economically in terms of the way labour force and so forth will work. It's pretty interesting to consider.
Okay, but what is the overall influence on society? Economics is one side of it, but going beyond that.
Well, I think if you look at it structurally, historically, and we were talking about this before the interview, you have to study the past to understand how the future is going to change. So we moved from the agrarian society, agriculture and so forth, into the industrial age. So people moved off farms, disrupted by combustion engines like tractors and so forth, and they ended up working in the Model T Ford production line and so forth. Today, those production lines are highly automated, so people moved out of manufacturing into services sector. But AI will disrupt human process. Things that we do today, like checklists and processes we have to learn by rote, AIs will be very, very good at replacing that. So the real question is, for humans who are disrupted by AI, where do they move to? They don't move back into manufacturing. They don't move into agriculture. Do they move into other service industries? That's really the question mark we have.
What are the implications for banks, corporates, the kind of audience we have here at Sibos?
So if you look at this historically, right now we have sort of a broad shift. You mentioned e-commerce, Juliet. So every industry that can be moved onto digital distribution is being moved onto that right now. If you don't believe me, just ask Sears in the United States this week, right? So you move from physical distribution to digital distribution. That's happening globally. But in banking, we're moving in a highly regulated environment. We move from this very high friction, high touch engagement model to low friction, low latency. So if you track that sort of on a graph, what you see is that we're moving to a time where we will expect financial services or banking to just be embedded in the world. The utility of the banking sector available on demand when and where we need it. So rather than going to the bank will just be available whenever you need it.
Intriguingly, InnoTribe is looking ahead to 2030. Why is it so important to think that far into the future?
Primarily because what makes a good competency to get to 2030 and to survive is very different from what's made a good bank the last 700 years. And that's really the paradigm shift. In the past, we'd talk about the best banks who have the best bankers. When bankers talk to me about the skills they need and so forth for the future, the first thing I say is, stop hiring bankers. You don't need them anymore. That's not going to be the competency that matters. It's sort of, the AI, the data scientists, the experienced designers. The core competency of banking moving forward is not about being good at banking. It's about being good at the technology that enables banking to be ubiquitous.
These are some fundamental changes. What else can banks start to do to start to prepare for the markets and the world that we'll live in 12 years from now?
So I think the real shift here is right now happening in the experience layer. So the emergence of fintech and a lot of the things that have been happening in that space, what's happened with Ant Financial and Tencent in China, for example, is changing our expectations of how that experience layer should work. So that's the first thing to do. Look at how the interface between the customer and the bank will change based on sort of this real-time delivery component. The second piece is really about what is the data you have that can give you an advantage in terms of this market. So if you look at credit provisioning, for example. In the past, it used to be about good underwriting models, good credit risk models, that when someone came and asked for a loan or a lending facility, you could put them through this engine and make a good assessment. In the future, it's going to be about predicting the need for your customers in terms of what need they have for credit and being able to, the instant you see a data point that indicates they need support, that you're there to be able to provide it.
Brett King, thank you so much for joining us on Sibos TV.
Thank you very much, Jack and Juliet.
Sibos cybersecurity professionals are in an arms race with cyber criminals who are increasingly well organised and well funded.
And here to tell us about the evolving threat of cybercrime, we're joined by Jane Frankland, who's been named as one of the top 20 global influencers in cybersecurity by IFSEC. And she's also the author of this book, In Security. This year at Sibos, she's one of the keynote speakers at InnoTribe. So Jane, welcome to Sibos
Thank
TV.
you.
And look, the world of cybercrime, it is moving at an incredible pace. So if you had to chart our progress, where are we today, so to speak?
The threat landscape is really, really interesting. It's highly complex, and right now I would say we're actually being owned by it. So we're seeing more threats evolve, the sophistication is increasing. Right now, the level of cybercrime is worth about 450 billion, so that's 0.8% of global GDP. So attacks are increasing, sophistication is increasing, but having said that, the sophistication required is not necessarily huge for the amount of attacks. So 70% of the attacks are not sophisticated.
But how is the actual threat evolving? And more to the point, how is it going to look in the future?
Well, that really depends on the actions that we take now. So this is something that I'm actually going to be talking about at InnoTribe at Sibos. So right now, if we don't make certain shifts, and these are really to do with people, to do with getting more women into the industry and also focusing on leadership, we are going to be in a terrible situation. So we have attacks coming through from cyber criminals, from hacktivists, and also from state-sponsored attackers and spies.
Jane, why are cyber criminals able to innovate so quickly?
They just don't have the restrictions that we do. So
Yeah.
we are restricted in terms of our employers, in terms of the way that we operate, and also in terms of regulations. So for attackers and cyber criminals, it's so much more open. So the business of cybercrime is huge. So they follow the money trail, and also it's easier for them. So they give what I talk about, giving to gain. So they're much more open, they're much more collaborative, and they're much more run like high-performing businesses. They have support contracts, they have marketplaces, and they are really strategic in how they go to market and who they target.
Right, so that puts a lot of pressure, of course, on those who are trying to combat these individuals. But let's put the spotlight on the banking industry, because you've got cybersecurity professionals there. So just how well are they able to protect their sector from these criminals, given that level of sophistication?
They're much more able than most. They have more resource. And what we tend to find and see in the industry is that most people in charge of it, so chief information security officers, don't have the resources. In finance, largely they do. So they have bigger teams and bigger budgets. So they're much more able. But you've got to remember that the advantage that the cyber criminals have over us is that they only need to find one way in. We have to mitigate risk. So our job isn't necessarily to secure all avenues, it's to mitigate the risk in line with the business's appetite for it. So therefore, we've always got to be prepared for when an attack happens or when we discover that it has already happened, because attacks can be in the network, or attackers can be in the network for potentially up to 146 days before they're even recognized.
It is a fascinating space. Industry experts talk about 5 problems in cybersecurity: industry, education, technology, recruitment, and talent. Are these the right 5 areas for companies to be focusing on?
So yes and no. So the way that I see it is that these are kind of lower down. What we have to focus on is really raising the awareness, improving our communication, and really actually focusing on the leaders and leaders within the whole ecosystem. So that means definitely the chief information security officers and making sure that they can communicate to the board much more effectively and are getting access to the board, because many aren't. We also need to help the board because they are not necessarily as cyber literate as they could be, so they need to be able to communicate to the CISOs. And we also need to look at the non-executive directors who also play a part, because they can keep the board accountable. So it's increasing their cyber literacy as well. And then also, in addition to that, is really looking at the city, so the fund managers and the analysts. So there's an awful lot to do with looking at the stakeholders and understanding what it's like in their world, seeing the world through their lens, and fundamentally making sure that we can communicate effectively so that they understand really what our job is to do so we can be supported much more.
Let's take a look at the book Insecurity, because it was published last year. The premise, absolutely fascinating, because you argue that the cybersecurity industry is being damaged by the lack of women. Why is gender so important?
Because women see risk in a different way to men, and I'm not discrediting men at all by that, but we just do. There have been countless reports on how women see the risk, differently. So therefore, because we have an industry that is predominantly male. So whether it's 90%, whether it's 80%, doesn't make any difference. We still have an industry that is run by men, and also most of the leadership roles are with men. So if we can't see risk accurately, how can we actually look to defend and protect our environments? And we need the women to come in and to also open up more diversity in general. So more diversity of thinking, of background, socioeconomic, ethnicity, and so on. But we have to do a better job of actually evaluating what the risk is. And the only way that we can do that is through women. Now, women also, interestingly, with regards to this, intelligence increases in a group when you have more women in the group. So there are so many reasons for women to come into our industry, and so many reasons for us to benefit from having more women in the industry.
Absolutely. What can industry do to attract more women into their cybersecurity teams, to strengthen those teams?
So we do have to look at how we are attracting them. But for me, the thing that, and we also have to look at how we're hiring them, but the thing that I'm most concerned about is actually the retention, because more women leave the industry than come into it. And when you look at why they're leaving, it comes down to culture. And the culture is extremely challenging. So I talk about high challenge and low support. And if we have this environment and culture that is asking so much of us, without the support, without that awareness amongst all the stakeholders that I've just spoken about, then they're not going to stay. But I always say what is good for women is good for men too. So therefore, what I see with regards to the challenges to do with women, they're the same for leaders. So we have high burnout and high stress, and certainly with Chief Information Security Officers, many are staying in those positions for less than 2 years, which is not long enough to make the changes that we need to make in order to secure people, environments, countries, and so forth.
We are so glad you're here. These conversations need to happen, and we need to have more of them. Thank you so much for joining us on Sibos TV.
Thank you.
Cheers. Well, that's it for this show, but there's much more coming up here on Sibos TV, including live coverage of the main conference session on banking at cross-border payments.
Thanks for watching, and we'll be back soon talking over more of the key issues here at Sibos 2018.